Yeah, so on the higher time frame, you can see that it's kind of consolidation in the 4 hours. The market is consolidating. Yeah, so the higher time frame does not have a much big bias, considering that today, Monday, 16th of February, we had a USD bank holiday. Yeah, so despite the consolidation, these are 4 hour consolidation, meaning there are some moves in the lower time frame, which we try our best to get catch of the moves. So when you get to 2 hour time frame, again, you note something. The market is moving, but not impulsively. It's moving, creating higher highs. Let me be precise with it. At first, the market changed the character from here, from bullish to bearish, meaning the market was um, bearish at this extreme low. We were very bearish with a lot of volume. But again, this bearish move received some rejection on this candle. From there, here, this is a lower low, again a lower high, followed by a change of character again to bullish from bearish again. Meaning now the market, we are anticipating from this change of character, we are anticipating for higher highs, higher lows, a higher high, a higher low, and a higher high maybe, or maybe even a change of character for more sales or buys, but yet to be confirmed. Okay, so remove that. We are bullish in 2 hours. Yeah, let's come to 1 hour and see whatever is happening in 1 hour. Yeah, the same thing. A change of character was observed. A change of character was observed here. Yeah, a bearish change of character. Again, here we had a bullish again change of character. So the bearish move was just a short-term move, or maybe a profit taking of major institutions. Yeah, so we are bullish. That's all I wanted to say. We are bullish. So having the consolidation happening at 4 hours, we must look. There is no a very precise order block in 4 hours where you can see that you are expecting a retracement for buys or maybe sales. So we are going to come to 1 hour. Yeah, it's our higher time frame in the case. Again, you note it's kind of a consolidation, but a bullish consolidation. Lower to 30 minutes time frame, see what's happening. Zoom. Again, you note something which you note after this a bullish change of character, the market started creating higher highs, higher lows, higher lows, higher highs, higher lows. So here we have number one, we have a break of structure, bullish. Yeah. So expectations were what? Expectations were we have, if this break of structure, it means we have an order block here. Yeah, that's our order block. So we were expecting the market to come after collecting internal liquidity from the fair value gap here. We were expecting after the collection of internal liquidity, the market to come collect another internal liquidity from the order book here, and then a rally. From this rally, what were we expecting? Leave it at that point. Then we continue to the 15-minute time frame. Again, this is the 15-minute time frame. What were we expecting? Again, the same thing. A rally happened, then collection of internal liquidity from this order block here. And as the market was rallying up again, another thing, interesting thing happened. The market left us what? It left us an ICT rejection block. Yeah, delete the drawings, mark the ICT rejection block that has been left in the 15-minute time frame. Yeah, it's there. Sure. Okay. Again, what else could we have used to make sure that we were precise and we got a sniper entry? Again, something interesting. Which one? Let me show you. You take your Fibonacci tool, drag it from the extreme low of this move to the extreme high of the move. Yeah. So what did it mean? The rally came up to a premium zone, then sellout, which retraced to a discount zone, and the discount zone was in a place that it coincidentally be placed in a discount zone that it malice with our ICT rejection block. So it was a place zone for taking a buy, a long position. Yeah, in a discount zone, in an ICT rejection block, meaning a rejection here. Again, what do you note? Another thing that, let me, what do you note? Something else. Look at this candle that caused the rally. This candle here, this one. Yeah, that candle. Look at the candle. Look at its volume. Where do you look at the volume of the candle? Here. Volume is here. Here. This. Do you see it? Do you see the structure that is representing the volume of this candle? Guys, do you see it, or I'm not even clear?
Yeah, the one that is at the bottom left, directly below it.
So it's a bar showing the volume of this candle, and what does it imply? It implies that this candle had a lot of volume. Yeah, meaning that it was a place where buyers were trying to defend. Yeah, the volume, and again the candle closure, the candle formation means a lot. There's a long story. It's a reaction, meaning that buyers rejected aggressively, pushing the candle higher, forming a wick. This wick, it was formed when the sellers were trying to push the price lower, but again the buyers with a lot of volume and momentum pushed price higher. So again, volume takes this extreme low as a buying zone. So I was very sure, I was very sure, I couldn't say that I took this position or this trade as a madman by taking the trade here. Yeah, you could have taken it here and target what? Again, what should you be targeting? Let me show you how you should target. Remove this Fibonacci. Again, draw another Fibonacci now from the extreme high of the sellout to the extreme low where you entered your trade. That's it. Yeah, you could have targeted the 50, the discount, the equilibrium, or this 61. The 61 zone is called a golden zone. It's a golden zone. Yeah. So I expected you to take a long position at this point, yeah, and put your take profit maybe there, yeah, or even at the discount level. What about your stop loss? Your stop loss, yeah. But if you look at this trade clearly, the stop loss to the risk to reward ratio is 1.23. How do you reduce the risk to reward ratio? You come to the 5 minute, yeah, 5 minute, and you wait for these candles to print inside your zone. Let me remove the Fibonacci first for a clarity of the chart. Yeah, you wait for these candles to print. Yeah, after they have printed, you want to increase your risk to reward ratio. So you put your entry at the center, at the middle line, or at the middle zone of the box. Yeah, that is being conservative, and you can see it has increased our risk to reward ratio to 2.77. Yeah, TP already hit. If you had several positions, you can extend it to your TP again to the premium zone, whereby you can be expecting that this market will rally to the premium zone, maybe sell, continue bullish, or drop We don't know what's gonna happen. The market will tell us. Yeah. So that's how I got this entry. Yeah, it's currently from the time I entered. For me, I entered here. Yeah, it has already given me 191 pips. Yeah, 191 pips. That's $19 for a 0.01 lot size and $1,900 for one lot size. Yeah, it's a good entry. Yeah. Any question on that entry? Any question? Let's be fast. Time is running out.
I saw an OB at the 5 minutes. So let's say that when it was on a lower time frame, it was like it has no that impact.
Okay, 5 minutes time frame. I want you to direct me to where the OB is clearly. Yeah. Which one? This one? Oh, let me remove this long position. This OB?
No, up
This one?
on the left, the one that
Okay.
gets,
Okay.
yeah,
This
exactly.
now, okay, yeah, very good for it because you have pointed out to something that I also wanted to discuss. Yeah, so this one, it's an OB, but we said when an OB is not respected, automatically it becomes a breaker block. So what are we expecting? We're expecting price to rally, drop to that breaker block, and continue uh, lulling again. Why? This was a resistance, but after being broken, the resistance turned to a support automatically. Yeah. So after that, what do you look for that can confirm it as a valid uh, breaker block? There's what you can see a rejection block here. So the rejection block at this extreme low of the rally in 5 minutes uh, coincidentally happens or places itself in the same zone as the breaker block. So we're expecting that after revisiting this zone, we are going to have a rally.
That's nice. So let's say like it's going to retrace there then for
Yeah,
mobile.
we are here for 40 minutes. The reaction will be seen. So more
Okay.
questions.
Okay.
So we can have a re-enter.
Yeah. You can, but right now, yeah, it's late. It's late in New York. If you like you love trading at night, you can have a re-entry, but it depends. Now here, for me, I don't administer for this kind of re-entries, but you can. It's really advisable. You just have to be precise with yourself. Have I made a profit today? If you are in a drawdown, I would not recommend you to trade because it will be over trading. Also, it will look like a fear of missing out. So if you didn't take a trade here, I would not recommend you to take a trade here because what if you record a loss? Yeah. But if you are in profit, maybe you are in profit, let's say $100, you can risk $20. Still you are plus 80. Am I clear?
Yeah.
Yeah. More questions.
I had a question, but now that one it has answered. Because I was asking why the reaction? Why did it react? Yeah, why didn't it just rally to the end up there? But now it has answered. There was that order block. Okay.
Oh yeah, this one. Okay, again, it's not only the order block. The market moves with a certain order. It's not just moving like a mad person. No, look, I'd leave the Fibonacci level here. Yeah, extreme high to the extreme low. So this rally, we were expecting the rally to be losing momentum from this zone, the 0.61 zone. Why? It's from 0.5, this one, 0.5 is an equilibrium zone. It's a zone where the market balances demand and supply. Yeah. 0.61 is a place that we are expecting that sellers, after they have been, they have failed to gain momentum or strength to push the price down, from this extreme low to here. After the sellers have failed to push the price down, we are expecting that they are going to come here and try to reclaim their position for a reversal. Yeah, 0.61. If you have other confluences that are supporting a sell, it's a really good zone for selling. Yeah, that's the power of Fibonacci. It's a really good zone for selling. 0.61 and 0.7 something here. Yeah, because it's a premium zone. It's past the equilibrium. When price comes to 0.61, demand is no more in control. It's the discount. Sorry, discount is no more in control. It's premium, and premium favors sellers because it's already expensive, and it's only a mad person who can buy if something is expensive. If you see a person buying at a discount zone, buying at a premium, if you see a person buying at a premium, it's either the person doesn't know what he's doing or he's mad. But again, in this zone, the discount, if you see a person selling at a discount, it's either a marketing strategy or it's either a way of disposing goods. Even in supermarket, you go in supermarket, you find that they are selling something at a discount. No, they don't sell at a discount because they are happy to sell at a discount and go losses. No, it's either a marketing strategy for you to buy more or a way of disposing the goods that they are holding. Maybe the goods are almost maybe expiring and they want to dispose the goods. Yeah, so buying at a premium it's a climb in the market. Again, selling at a discount, it's also prohibited in the market. Yeah, a question. A question, guys. Time is running out. I want us to learn. You know, these things will help, and you don't want to ask questions, my guys. Okay, silence means that you guys are satisfied with everything. You understand the market with a lot of precision. I want, yeah. 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 I'm sorry, I'm not. Yeah. 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 Responsibility. Oh, spotting the order block. Okay. Let me be precise. In 5 minutes. You are not clear. You're not much. Yeah. Yeah. Okay. An order block is only valid after a break of structure ama a change of character. It's only valid. Are we together? Did I answer your question? Yeah, you're not clear, please, Faith. I can hear you from a very far distance. That's why I'm struggling to listen to you.
Yeah. Unanisikia sasa?
Yeah, you're not clear.
Oh, nasema nimeelewa. So ina form after.
Yeah,
Change
after.
of character.
Yeah, after, not before. Ndio sasa, this is price action. Yeah. Maybe market is forming higher highs and higher lows. The higher low inakuanga imekuja kumitigate this order block or fair value gap. and mostly an order block. Again, a break of structure, a higher high, a higher low. Inakuanga imekuja ku collect liquidity from these order blocks. So for you to confirm that it's an order block, there must be this break of structure. Why? After the break of structure, then this order block becomes valid. So you expect a retracement, a collection of internal liquidity from the order block, or maybe the fair value gap if there is. Are we together?
Yeah, and a question,
Yeah.
Can you show me how I could have used the footprint indicator to spot buying point on that using that big downtrend candle?
This one.
Yes.
Okay, thank you.
How I could.
Thank you. Let me do it. Do it, please. We are first going to switch into 15 minutes time frame because it's bigger compared to the 5-minute time frame. Again, after switching, we activate the footprint overlay volume. We zoom. It's about zooming. If you want clarity, you zoom it. Okay. So after zooming, there's something interesting in this candle. And these interesting things, the thing that is happening in the candle, make it helps you decide to lose or have focus on the candle. As you can see, this is 16, 54, 54, 153, all those. And it's a very small volume. First of all, you have to complement that. It's a very small volume, meaning a minimum number of sellers. Again, here, a minimum number of buyers. So when the buyers started to enter the market at 133, this one, 133, that's where I expected you, first of all, mark that number, 133. Yeah. Marked. After marking 133, you spot the number with the highest number of sellers in this drop, in this waterfall. And again, I can see that we have 732. Are you seeing it on your chart? Let me zoom it. This one, yes. 732. You come.
Yes, I can see.
Yeah, you come and mark 732. Yeah. After marking 732, you know that either this one or this one, if any is broken with a volume, any of them is broken with the volume, it depends now on the closure of the candles. It means that if this is broken, the upper side, it acts as the new support. Why? The buyers who are here below will migrate here. If this one is broken below with the volume, it means that all the sellers who are here will migrate here and will be ready to defend this zone. Yeah, that one I think is clearly described. Yeah. So we disable now the indicator and go back to our normal chart. Yeah, there is our normal chart. So zoom it clearly. There are our two zones. Go to 5 minutes time frame, see whatever is happening. Again, what do we see? The price didn't break either here with the first candle. Again came here, not breaking. Still, it's thinking. It's testing the strength of the buyers at this upper zone. Yeah. So still to this point, it's our support. It's our resistance to this point. Again, it broke, but with very minimal volume. Yeah, here, as you can see, very minimal volume. Yes. It broke here with very minimal volume and it dropped again here with also a minimal volume. You can see from these candles that the volume is really minimal. The wicks are saying that the market has not decided which direction it's taking. Yeah. So here you see here this candle broke up, but when you look at the volume of the candle here, this one, the volume here is lower compared to the last, so it's a false breakout. Yeah, it's just that there's no rejection. Again, look at this candle here, no volume, again no volume, again volume, break, but it's weakening a lot. Again here, volume decreased. Again here, a break. What does that break tell you? Look at the candle, how it closed. Let me remove this line for you to see here. The candle closed with a higher volume compared to this one. The volume of the buyers here had increased. It was only a signal that the volume of the buyers had started creeping back into the market. Again, the sellers here tried to come and defend the zone. Volume of buyers decreased at that point. Okay, what does that tell you? It was a place that we had a good decision to say that the market has taken a new trend, or we were buying until this candle came. This candle, what did the candle do? It built a lot of volume. Yeah, it built a lot of volume and a lot of, there's something we call delta and theta. Yeah, those ones are, they are strange terms, but you'll come to understand them later. You can see within 5 minutes, this candle covered a very long distance, this one, compared to the rest. Yeah, so that was about theta, and then the delta, the buyers who are in this candle are many compared to the other candles. So meaning the buyers had already taken a charge of the market. So that was the only precise zone that you could have taken a buy position. Remember, it's a 15-minute candle, giving you that precise entry that is giving you a 95 pips. Yeah, from this candle closure, what were you expecting? This candle, it closed, rallied a bit, and then dropped, gave you an ICT rejection block that could be favorable for more buys. Yeah, again, it sits on a same zone with a breaker block. That makes a lot of sense for you to be buying at this point, and that's ndio maana nasema this market is always planned. It moves with a lot of discipline. A breaker block, a rejection block here, volume, theta and delta are all in the market. Again, let's measure the volume of the candle, the point of control of the candle. Very good. The point of control of this candle was there, exactly where this rejection block came tapped. So you could have even taken a buys from this rejection, from this point of control of that candle, considering that we have the volume here, theta is on our side and delta is on our side. Yeah, you could have easily taken that. Have I answered your question?
Yes, you have. Thank you.
More questions? Okay, if there's no more questions, I think you are with the analysis or maybe with the market, but I'm sure that you are not as you are before, is it?
Ni kweli.
Yeah. So more questions. Yeah. Gladys, a question. Do you have a question? Esther Minor, a question. Okay.
I think we just need to do more practice, because now, like for me, I had not spotted that OB, that breakable.
Yeah.
Yeah.
Yeah, I think you just have to, when you adapt seeing them, it will be very easy for you to be spotting them anywhere in your chart. Anyway,
Okay.
yeah, it's just about adapting how they are formed. That's price action. Watching what the candles are doing. When yesterday I sent you a link, I didn't know whether you joined that meeting. I wanted you to have exposure, and you saw anyone who joined that meeting, that analysis, you saw that those people, although they are not doing it to perfection, they are focusing much on liquidity. Where is liquidity? They must know where is liquidity, where does liquidity lie, how does price move? Price moves by taking external liquidity, then internal, to external. That's how price moves. It's a narrative, it's a story that keeps repeating itself. Yeah. So if you adapt, ukishazoea spotting these things, it will be very easy for you. Again, Robert, you can see the reaction that happened with the breaker block. You can see.
Yeah.
And so tomorrow, what do you want us to do tomorrow? I want you to tell me.
Yeah, during the day we try to analyze the market.
Yeah.
Then from there,
Yeah.
we will have questions.
Okay. And congratulations. Today you did a great job. Yeah.
Thank you.
You spotted the rejection block, and it worked to perfection. Yeah. That's it's a good progress, by the way.
Yeah, but thank you.
Yeah. So we have 2 minutes. You have 2 minutes. You can say anything or whatever you want to say before the two. Again, look, and uchukue fib, your fib retracement, drag it and mark where the market will reverse. Something to note, we are almost reaching the 61%, or maybe 61, where it's a premium zone, a golden zone. So taking buys here, I told you, although there are signals, but it's a climb to take buys at an equilibrium. It's prohibited. It's a climb. So again, acha niseme aje, tomorrow, acha niandike huku ndo nisifute. Tomorrow, let's focus mostly on volume, spread analysis, volume spread analysis, and then again we talk about what? We talk about the footprint. Footprint is really important. Ona asubuhi, there's something that I shared. If you remember, in the morning, I think it's this candle. When did this candle? Let me disable this one and be precise with whatever. I don't want you guys to crucify me here. Not this one. Yeah, even this drop. Do you remember that nimetuma? I recorded this drop. Yeah, I did it again. There's a drop that happened in the morning. This one, this drop. you have to I caught these drops by the footprint analysis alone. Yeah, we'll talk it tomorrow. You see the reaction that is happening at the 61 zone. Yeah, you see it's not a good zone for engaging the market. Yeah, so after that we'll focus on that footprint. Yeah, again,
and also Fibonacci. Some of like me, I'm not very good with Fibonacci. I've not even set mine.
Yeah.
Yes, tomorrow I'll set mine.
Fib and then the